Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you how to trade JD.com. I'll be going through 4 different option strategies in order to show you how to use this stock coupled with those option strategies in order for you to make consistent income. Now, these option strategies are going to work particularly well if you're also trading with a small account. Now, if you're new to options trading, or you're trying to use options to make some additional money in order for you to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you how I'm going to be trading JD.com, and that ticker is going to be JD in order for me to make consistent income in order to grow my account portfolio over time and not overnight. Now, you guys know how we do. We like to go ahead and get down and dirty with options. That being said, let's go ahead and jump into the advanced feature right here in order for us to get the chart open. We're going to go over to the 1Y, which represents the 1 year mark, in order for us to see how this stock is doing. Now, this is one of those setups that I particularly like. I usually like it whenever the share price is currently trading below the 200-day moving average. In my mind, I think that creates a very good opportunity for me to get into the stock. Now, the current price of JD is $31.03. So let's just say $31. However, the 200-day moving average is around $36. So it's about $5 away from the 200-day moving average. Now, for those of you that do not know what a 200-day moving average does, it gives you the price that the stock is trading at over the last 200 days or 6 months. So the average price that this stock has been trading at is around $36. Now, we're going to go ahead and go to the bottom, and we're going to check out our RSI, or our relative strength index. The RSI is a momentum indicator which tells us whether the stock is being overbought or oversold. The current RSI right now of JD is going to be around 46. So that's below the 50 mark. Now, any RSI that goes below the 50 and is heading downwards towards the 30 mark tells you that that stock is being oversold, and vice versa. Any RSI that's 50 and moving closer to the 70 mark tells you that that stock is gonna go into overbought territory. Now that we have that information, how are we gonna use this information in order for us to go ahead and make a strong decision about what option strategies we're gonna be doing? Now, lastly, before I go ahead and jump into the stock, for me to show you some additional information, what I want to do is show you a strong support. So if I draw my trend line right here, you could see this stock has a very strong support around the $30 level. So remember that's going to play a big part when selecting our strike price. Now let's go ahead and go back to get into some critical information before making a decision of what option strategies to use. Now let's go ahead and scroll down. Now, the one red flag that jumps out at me, particularly for this option strategy, is the headquarters. The headquarters is in Beijing, China. The reason why it's a red flag is just because it's in China. That's pretty much it. This stock, in my humble opinion, is a great stock to own in anyone's portfolio. That's why I'm added it to my portfolio. JD.com is the Amazon of China. So that's how good this stock is. Now let's go ahead and scroll down some more in order to get some additional information. The 52-week low for this stock is $25.60, whereas the 52-week high is around $47.82. At the current price of $31, it's way closer to the 52-week low than it is to the 52-week high. So that gives me some added value, and it gives me some great opportunity. Now, if there's a second red flag, which I really don't think there is a red flag, it's going to be the dividend yield. The dividend yield here is really, really good. It pays a decent 3% yield. The reason why I would say it's a red flag is that unlike the American companies where we get paid dividends on a regular basis of probably weekly, monthly, or quarterly, this stock pays dividend only once annually. So this is not going to be a good stock if you want to become a dividend investor. Now let's go ahead and scroll down even further and see what the analysts have to say about this stock before we get into the option strategies. Now, this stock represents an extremely strong buy as of 91% of analysts are saying that this stock is definitely a buy. Now, if you go down to the research report, we're going to see that most of these analysts also give this stock a 5-star rating. Now, how many American stocks do you see that have a 5-star rating? I dare you to put it in the comments below. Now, going down even further, we have the fair value of the stock. So the fair value is actually $60. The fair value tells us that if everything works out how it should be working out, then the actual price of this stock should be around the $60 mark. Currently, however, the actual price is at $31. So if this stock were to go back to its fair value, you would have doubled your money. Hence, a lot of opportunity has presented itself with this stock. Lastly, what we're going to do, we're going to check out the earnings. Okay, the earnings is a bit far off. It's expected around November 13th, and that's going to be before pre-market. Now, all that information that I've highlighted, I'm going to use that in order to make a decision what option strategies to get into. Now, before we go ahead, if you guys haven't already, now would be the second best opportunity for you to go ahead and like the video. Subscribe to the channel for more videos like this. Now let's go ahead to trade JD options down to the bottom in order for us to open up our options chain. Now, for those of you guys that are new to the channel, or if you may be new to options, all this information down here that I'm circling right now in its entirety is what's known as the option chain. And what the option chain does is that it gives us enough information in order to make a very informed decision before entering any option contract. Now, speaking of option contract, before I proceed, I would like you guys to do yourself 2 favors. Favor number 1, always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second favor you need to do yourself, always make sure to have an exit strategy before entering any options contract. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. Now, these videos are for education and entertainment purposes only, and these trades represent what I am doing with my personal portfolio. Now, let's go ahead. We're going to go to sell, and then we're going to go to put. And this is going to be the first option strategy that I'm going to use on JD.com. Now I'm going to go ahead and select my strike date. The strike date I will be using is going to be October 3rd, which gives me around 28 days to expiration. I usually like to go for monthly expiration dates, and I think that's enough time to handle all the volatility in the stock market. Now, with my sell and my put and my 30 days expiration date, I'm going to go ahead and select my strike price. The strike price I'm going to be choosing is going to be right ATM or at the money. So I'm going to be going with the $30 strike price. Remember, I did highlight that a $30 strike price presents a very, very strong support, so I have no issues choosing that strike price. Now, because this is a sell option, I'm going to be receiving money. Remember, I did promise you I'm going to show you how to make consistent income. Now, once I go ahead and execute this trade, the amount of money I will be getting is going to be $65. In order for me to do this option strategy, which is known as the cash secured put, I will have to leave cash as collateral in order for me to go ahead and do it. The amount of cash I will need to leave is going to be $30 multiplied by 100 shares, because each option contract contains 100 shares, so I'm going to be doing one contract. Now, we're going to go ahead, we're going to hit continue. And there you have it. So the cash secured put. Now, when you go ahead and you do the cash secured put, you're going to be getting income. The amount of income you're going to be receiving, that is yours to keep no matter how the trade go. In this case, the $65 I'll be receiving is going to be mine to keep no matter how the trade goes. Now, quite briefly, I'm going to explain to you the 2 ways in which this trade could go. So come expiration date of October 3rd, and remember, you do not need to wait until expiration date in order for you to make a decision of whether you want to get out of the trade or not. So at expiration date, if this share price of $31 happens to go below the $30 mark, then what's going to happen is that you're going to lose your $3,000 that you left as collateral, but now you're going to own 100 shares of the stock. Now that you own 100 shares of the stock, there are other option strategies that can be used in order for you to continue to get consistent income, but that's going to be for another video. Now, the other way this trade could go, come expiration date once again, if this share price stays above the $30 strike price, then you're going to keep your $65 that you receive firsthand. Remember, that's always going to be yours to keep no matter what. But then now you're going to get your $3,000 of collateral that's going to be released back to you. Now that you have your $3,000 cash back in your portfolio, what are you going to do? Well, in my case, I'm going to rinse repeat, and keep making consistent income using this exact same stock. Now, that is one option strategy that I'm going to be using with JD.com in order to make consistent income over time. Now, let's go ahead and go into the second option strategy. Now, if you guys have any option strategies based on the information I presented at the start of this video that you think can be used for JD.com, then let me know in the comments below. Now, let's go over to buy. We're going to go to call. And now we're going to choose our expiration date. The expiration date I'll be going with is going to be January 15th, 2027. And that's going to give me 497 days to expiration. Now with this expiration date, it's a way longer out. And the reason I'm doing that is because I want to buy myself more than enough time in order for this trade to go in my favor. So now with my buy and my call and my long dated expiration date, I'm going to go ahead and choose my strike price. The strike price I'll be using once again is going to be ATM or at the money. So I'll still be going with the $30 strike price. Now, because this is a buy option strategy, I'm going to have to pay. Now, I did promise you, I'm going to show you option strategies that's going to make you consistent income. So bear with me. This is just a prelude to you making consistent income. So since this is a buy call, we're going to have to pay. The amount we're going to have to pay for the $30 strike price is going to be $6.65. Once again, we are dealing with options, so you simply multiply this by 100 shares and you're going to have to pay around $660. Now, this new option strategy is what's known as a leaps option. Now, you do see long call here to your upper right, but what a leaps is that a leaps is a long dated long call which goes 365 days or longer. Now, for those of you who are not familiar with the acronym LEAPS, it stands for Long-Term Equity Anticipation Security. Hence, we used LEAPS. Now that you have a LEAPS in your portfolio, what are you going to do with it? Well, now we get to the bread and butter. What you're going to do, you're going to use that LEAPS option in your portfolio as collateral in order for it to keep generating consistent income. So now that I have the leaps option, I'm going to flip the switch and I'm going to change the strategy. So now I'm going to go to sell. I'm going to go to call. And then now I'm going to choose my strike date. Once again, I'll be using monthly expiration dates. So that's going to give me the October 3rd for 28 days. Now I'm going to go ahead and choose my strike price. The strike price I'll be using is going to be above the current share price. And in this instance, I'm not going anywhere close to the share price. I'll be going a lot higher up. So the price I'll be choosing for this is going to be the $34 price. Ideally, the price you want to choose is going to be the $36 price because the $36 price is going to give you your price close to your break even. Whenever you decide to purchase a leaps option in your portfolio, always look at the break even price. Now, if you rewind the video just a bit, you're going to see your break even is around $36. So ideally, this is what you want to choose. However, you could see the premiums here is almost zero. It's almost non-existent. So I'm going to go down. I'm going to choose the $34. Remember, with options, it is not black and white. The only way to learn options and be successful is you have to go ahead and do three things. You need to practice, practice, practice. So the other reason why I'm going to be choosing the $34 strike price is that this stock usually stays flat. It doesn't do too many spikes up or spikes down. So it's good for consistent income. So with the $34 price now, I'm going to be receiving money. The money I'm going to be receiving is based on me acquiring the leaps option in my portfolio because that's what I'm going to be using as collateral to do this sell call. Another name for sell call is going to be covered call. So let's go ahead. We're going to select the $34 strike price. Now, with the $34 strike price, we're going to get paid, and that's what we're here for, to get paid consistently. The amount of money I'm going to get paid is going to be 0.42 or $42. Once again, you multiply your 0.42 by 100, that's going to give you $42. Now, how does this trade work out? Or rather, your exit strategies. Come expiration date, what you want is that you want this share price right here, you want it to stay below the $34 price. Once that happens, then you keep your $42 and then you get your leaps released back to you. And then you go ahead and you do the same thing. You rinse, you repeat, you keep making consistent income. Now, the other way this trade could go, if this share price decides to go above your $34 strike price that you chose, then there's a very strong possibility that you're going to lose your leaps option. So you don't need to worry because Robinhood or any brokerage you're using going to do this automatically for you. So what's going to happen is that they're going to sell your leaps because remember you bought it to open, and then now they're going to buy back your covered call because remember we sold it to open. The difference is going to be deposited into your account portfolio. Now, that's for another video. So, the whole purpose of you buying a leaps option is for you to keep it in your portfolio as long as you can. The reason why you want to keep it in your portfolio as long as you can because you want to keep using it in order to make consistent income. The way that you make the most money using leaps option is what's known as share price appreciation, or how I like to say on this channel, investment gains. So, the major amount of money you're going to be making is going to be between the strike price you chose, let's say $34, and the current share price where you purchased the leaps. So let's say the current share price is going to be $31. The money you're going to be making if the share price breaches your strike price is going to be the difference between $34 minus your $31, which is going to give you $3. You multiply your $3 by 100 shares, and that's going to give you $300. So all things remaining equal, that's the amount of money you're going to make. Of course, there are other factors that go into this, which is going to minimize that $300 that you're going to be receiving. This is just a basic guesstimate. So there you have it, investors and future investors. This is how I am trading JD.com. If you guys want to see a live video of me trading JD.com, then check out my Wednesday video where I went through the entire video and show you what strike price I chose and my criteria for choosing those strike prices. I also did the covered call in order for you guys to see what income I received. Now, also, if you guys haven't already, now will be the third best opportunity for you to go ahead, like the video, subscribe to the channel. Make sure to hit the notification bell to get an alert when I post a video. But here's the most important thing. I do create all this free content in order for me to help as many people as I possibly can make income from options trading. So if there's anyone out there you know that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many as we can. Now, until the next video, keep pushing your investments.